Welcome back. Well, the market mood continues to be a bit more somber. It's been worsened by some of the earnings which have been weak. Take a look at Havells. There's no respite there. That margin performance has been really disappointing and disappointing across the board. Pick up any of the segments right from switchgear, cables to Lloyds to consumer durables. There's a miss across the board. The investor presentation for Havells is out as well, and we'll run the important commentary coming in from the management for you at the bottom of the screen. But they are talking about high volatility in the commodity prices that has impacted the contribution margins. They are saying festive season shift has led to advancement of A&P spend to Q2, and that's the reason the margin is under pressure, because they are seeing some sort of advancement of costs coming in into Q2, and that's why they are expecting some pressure there. In terms of the other details, there's not much color about the outlook and the festive season as such, but they are talking about the insurance claim that they had to deal with in one of their factories. They're talking about decent growth in switches and domestic switchgear business. However, industrial switchgear growth impacted by higher base due to large institutional orders that were there last year. The cable segment volume growth has been strong as per them. They're saying it's predominantly driven by wire, which also aided the spillover from the Q1 destocking. But that volume growth is not translating into the EBITDA, and that's the real problem that the street is grappling with right now. They're also talking about internals like the cable margins impacted owing to absorption of high cost inventory against falling raw material sales prices during May to August period. So all of that is impacted. So higher A&P spend coming in. There is volatility when it comes to the various prices of the raw material. Plus this entire switchgear business, etc., is adding a bit of a problem area for Havells right now. That stock is down almost 6 to 7% right now. Whether there'll be more cuts coming in, whether there'll be some brokerage downgrades, etc., we'll get to know that only tomorrow. Let's quickly take a look at Tata Communications while we're at it and while we're addressing some of the earnings as well. That too has been under pressure. It has seen a bit of a recovery from lows, but it is under pressure. So, look at all the stocks that we have been seeing in terms of reaction to earnings. Bajaj Auto down 12%. We had Nestle coming during the day. That stock was down 3 to 4%. You also have these couple of names coming in the last 1 hour, Tata Communication and Havells. The stocks which are reacting positively are Mphasis maybe and a Karur Vysya Bank, but other than that, most of the earnings have been on the weaker side, and that seems to be the Q2 early indication. Sudip, would you concur with the view? Q2 early indication suggests margin weakness and a miss on earnings, more downgrades than upgrades?
Well, unfortunately, that looks like the scenario. I think there is definitely pressure, and that is getting reflected in the financial numbers which are coming out in Q2. I would think that IT would be an outlier. There is generally a much better performance and much better traction as far as technology companies are concerned. But many other sectors are witnessing pressure. Very clearly, the earnings are under pressure. Of course, there is the silver lining that we had a good monsoon and the festive season has kicked in. So half year can be different. We'll have to wait and watch for the festive sales numbers for pretty much all the sectors, including automobiles.
Right, okay, that's the take coming in consumption. Sudip, what's your take on autos? You think the best for the year is behind us, clearly?
Really, things can change very fast. We have seen some pressure and there is some inventory accumulation at the dealership, and there is some challenges as far as liquidation of old inventory and things like that is concerned. But festive season has just kicked in. We have a long festive season. There is the Dussehra event followed. We are going to have Diwali. We are going to have many other festivals followed by Christmas, New Year. So let's wait and watch. Also, I must say that rural consumption, there are definite signs of pickup in rural consumption in multiple pockets. It's not that uniform, but in pockets, rural consumption is picking up. There are a lot of activity happening as far as government spending is concerned. So I won't really kind of discount the possibility of a consumption pickup in second half of the current fiscal. Let's wait and watch. As things stand today, there is pressure, but I won't say we have seen the best already.
Okay, we perhaps haven't seen the best. There is still some room and optimism there. Sudip, could you talk about Havells individually and what will be your sense there? Because as we were discussing with the earlier guests as well, this one has time and again disappointed on the earning front. Every quarter there is either a volume impact or a margin impact or something like that. And the stock also hasn't done much compared to the rest of the market.
Well, unfortunately, what you're saying absolutely right, Anisha. I think the margin has been a problem. Volumes have gone up in different points of time, but the margin continues to remain under pressure, and that is definitely worrisome. I'll probably wait and watch for the Polycab numbers and what Polycab is showing as far as margin is concerned, and then be in a better position to compare and comment on the relative position. I don't know whether this is a general market issue where the margins have come under pressure or it's a company specific thing. Let's wait and watch.
That's quite interesting. Okay, wait and watch mode when it comes to some of the other players from within the sector, Polycab being one such case in point. But Kunal, on the charts for both Havells and Polycab, because they too have come off quite significantly from their 52-week tops.
I think Polycab is one of the stronger one. I think the stock which had done reasonably well. I remember I think there was a point where the stock fell from 5,500 to 3,800 odd mark, 3,800, 3,700 mark in a matter of I think just about 2-3 weeks. And post that we've seen the stock recovering, doing exceptionally well. Even in the last 3-4 months, the stock had done reasonably well, climbing up from 6,500 to almost 7,500, 700 levels, which it tested. So it's just that in the last 1 or 2 days is where you've seen the stock going into an underperforming zone. So when a stock outperforms in the toughest of the market conditions or in the most volatile conditions of the market, and then caves in or rather corrects in in the last phase, that's where we probably believe that it's more of profit booking, but the strength is still intact into the stocks. So I would believe Polycab is one of the strongest, stronger names out of the two. In case if the stock happens to retest its 50-day moving average, which is at 6,750, 800 levels for Polycab, that could be a very good level to go for a contra buy.
Okay, and Polycab also comes out with its earnings later today, so it would be interesting to watch whether it's able to carry forward the same sort of margin disappointment that we saw from KEI and Havells, or is the company able to outperform on the margin bit? That's something we'll try and watch as we get those numbers. But talking about earnings, as we were highlighting, Karur Vysya Bank is now sitting with a gain of 7%. So after the earnings were out, the stock slowly and gradually moved up, but now it's at the highest point of the trading session. There's a definite momentum there, so a thumbs up coming in from the street as far as Karur Vysya Bank is concerned, and Mphasis too 6% higher. In fact, on that note, here out what Mphasis management had to tell us. They talked about the bottoming out of the mortgage business. They talked about BFSI picking up in a gradual way. They were very confident about maintaining their margin band of 14.6 to 16%. Here out what the management had to detail out earlier.
Q4 calendar typically seasonally weak. Some of that seasonality will play out, but we do expect that we can continue to see growth trajectory build up again between Q3 and Q4, and that's why I think for a full year basis we still believe that we can continue to grow above market. So I think that's the guidance purely based on order book, pipeline, deal book, in-client activity, and of course improving macro, especially around BFS. The deal pipeline is actually up about 23% on a YOY basis in Q2, and also up low single digits on a sequential basis. We also had a pretty big jump YOY last quarter. So I think if you look at the stages, origination of deals clearly seems to be originating deals. There are two trends to call out in the pipeline. One, we've definitely seen, even in the TCV number, we've seen a healthy mix of the sub 10 million deal category, even actually the sub 5 million deal category. That's been the biggest jump even on a YOY basis. That indicates that in-year quick consumption, short burst programs are getting funded, and that's a sign of the discretionary spend slowly coming back. We called that out in March, April as well, and we are seeing that play out in the last quarter as well.
Okay, that's what's playing out for the IT pack and of course Mphasis in particular. Where are we currently at? Still down about 200 points, 24,839 for the index. Other than the sectors that we just talked about, Sudip, where else do you think you'd be a buyer in this current decline?
A couple of sectors I like, which includes metals. I know there is a lot of volatility in metals and a lot of uncertainty around metals. But the fundamental fact which remains is that US rates are coming, interest rates are coming down. And when US interest rates come down, invariably metals gain. Yes, there is a big China factor, which is a question mark, whether there will be further stimulus, whether the metal demand will zoom in China. All this is a big question mark. But having said that, I think the US interest rates are definitely coming down, and there is a strong demand for metal in India as well. So I am in the favor of buying aluminum value chain, because that is one which is a structural shift. People and businesses are moving from traditional other metals to aluminum. Look at the transition from IC to EV. I think the use of aluminum has grown multifold. Instead of iron, steel people are using aluminum. Look at the modern appliances. Look at pretty much everything which is happening around us. The use of aluminum is growing by leaps and bounds. So structurally, we are positive on Nalco, Hindalco, and even Vedanta. So from a long-term point of view, all three are a good buy. Vedanta, of course, has the additional, corporate restructuring benefits, which at some point of time will accrue to the shareholders.
And that's the view coming in on some of these metal names. Which are the other F&O top losers? Let's take stock of that. Havells, of course, will feature in that list. Bajaj Auto does. But there's Oberoi Realty, Piramal Enterprises and BHEL as well in that list. See, Rudramurthy, what would be your take on Oberoi Realty, Piramal Enterprises, BHEL?
On Oberoi Realty, it has just taken that support at 1750 and gave a very clear bounce, and it went on till that levels of around 2000, 2030 zone, and we are seeing some profit booking today in the general market correction. However, the chart patterns of Oberoi Realty is really good. So I will be a buyer in this stock, might be levels closer to that 1850 to 1870. One can definitely look at buying Oberoi Realty. This is just a correction what we are seeing in today's market. Any dip in this stock, I will be a buyer. But if I see the chart patterns of BHEL or even for that matter Piramal, that is on a different move altogether. Shorter term trend in BHEL is definitely down. Lot of crucial supports have got broken, and if it breaks now and closes below these levels of around 250, furthermore downside in BHEL can be seen to levels closer to 220. So I will be looking at shorting opportunity in BHEL, and Oberoi will be a buying opportunity on dips. And if I have to look at even Piramal stock, again, this is just in a consolidation mode now, and it is just resting closer to its support zone of around 1020, 1030 levels. So I will be a buyer in Piramal, might be keep a stop loss of around 980, look at buying it closer to levels of around 1000, and Piramal and Oberoi will be on the buy list for me.
Point taken, but Bajaj Auto continues to reel under pressure. In fact, let me bring on board some of the expert opinions that we had earlier in the day, because if you hear out the president of FADA or the vice president, he's talking about how the festive season is expected to be very good. They've already seen double-digit growth as per him in the festive season, and they're expecting it to continue for the entire year. And they're also talking about how the discounting has increased. In fact, the discounting is 2x to 3x than what we had seen normally. So he's saying it's not fair to compare this year with last year, because last year was very different. This year there is a bit of a pressure on margins, pressure on demand. Hear out what Mr. Sai Giridhar, the Vice President of FADA, had to tell us.
For first 10 days of the festivity is that there is a double-digit growth, and if you talk about two-wheeler segment in particular, it's approximately 12% growth if you compare it with last year. So we are still bullish, and we are still believing that we'll be able to achieve a 20% growth in this festivity period. Last year, the entire festival of 42 days, there were approximately 38 lakh vehicles which were sold across India. This year, we are targeting approximately 45 lakhs, and we think that we are in line, because if you see that first 10 days contribute 20% of the entire amount of vehicles which are being sold, and then we are in line of achieving approximately 45 lakh vehicles for the entire 42 days of festivity.
Okay, that's the take coming in right now. Axis Bank, meantime, that's going to be also delivering its numbers. Let me take it across to Gaurav to find out what is it that the poll is actually penciling in for Axis Bank.
Axis Bank is set to come up with their Q2 results, and when we talk about numbers, now analysts are expecting net interest income to remain a little muted, and the reason being that when we talk about cost of deposit, they are expecting this to rise even in this quarter, and that is the reason why we may see just 1% growth on a sequential basis in net interest income. Now pre-provisional operating profit will follow the same trend. We may see a muted growth there as well, but when it comes to profitability, we may see provisions going down a little, because let's not forget that in the last quarter we have seen that there was a negative surprise which came from the bank's unsecured lending, and that is why provisions were high. So in this quarter, analysts are expecting provisions to go down, and that may support PAT growth of around 5% on a sequential basis. When it comes to loan book, now they are not expecting any kind of negative surprise like last quarter. Last quarter we saw deposits actually degrew almost by 1%, but in this quarter they're expecting advances as well as deposits to grow almost by 3% on a sequential basis, which will lead to around 14% growth on a YY basis in terms of deposits and 12% growth on a YY basis in terms of advances. When it comes to commentary, now what they're expecting is that any kind of commentary on the asset quality is going to be crucial for Axis Bank, because just like I said, in the last quarter we have seen unsecured lending being a little bit of problem for the bank. But apart from that, any kind of commentary on the margin recovery, any kind of commentary on net interest margins, because now analysts are also expecting net interest margin to go below 4% mark, which had been there for the bank for the last few quarters. So there also any kind of commentary is very important. And lastly, any kind of commentary on the unsecured segment and credit cost normalization is also going to be something that people will be watching for. So definitely watching out on how the numbers pan out and how the commentary pans out for Axis Bank.
So that's the take on Axis Bank. Of course, the call is at 5:30, where you can hear the management talk about their earnings. You can tune into ET now, and we'll bring you all of those voices. In fact, not just that, there'll be voices from Infosys as well as Wipro joining us on the channel as well, and you can tune in to hear their commentary about their earnings. For Infosys, we are working with an expectation of an uptick when it comes to the guidance for the full year. Maybe 4 to 5% is what they're likely to do versus 3 to 4% what they had penciled in. And the EBITDA margin guidance is expected to be 20 to 22%. That will be led by the 3% growth in the quarter gone by, improvement of margins by 20 basis points, and all of that will trickle into profitability. There is that acquisition bump up which we are expecting as well, and overall operational efficiencies are likely to trickle in. Tailwinds of anywhere between $3 billion to $4 billion. With respect to Wipro, the growth is going to be flat. Not bad given the kind of weakness we had seen from Wipro of late. But going forward as well, we are expecting that the guidance will be -1 to +1% for Q3. There will be a bit of an improvement in margins by 20-30 basis points, so that the number comes closer to 16.3, 16.6% thereabouts. And overall, we are expecting a decent show from Wipro this time around as well. Sudip, what's your take on the IT majors? There is clear dichotomy. If you look at the, the large cap companies, they of course have been slower with respect to growth, but the likes of Mphasis, etc., have managed to outperform. Any view or any top bets within IT?
Anisha, I think what's happening is there is a significant recovery and future recovery possibility as far as BFSI is concerned. And the technology companies which are catering primarily to BFSI segment or have a skew towards the BFSI segment are expected to win. So Mphasis, as we know, has 60% plus business coming from BFSI. So naturally, they're the beneficiaries of that. And we believe that they will continue to benefit from this trend. As far as other IT companies are concerned, anybody having a skew towards BFSI or a chunky business coming out from BFSI will benefit. The deal wins also will start happening in BFSI. We are positive on Infosys as well. We expect the commentary to be robust, and things should pick up from most of the IT majors also in the near future. The US economy is definitely heading towards a soft landing, and the fear of recession is behind. And obviously the deal wins will start kicking in. The postponements which happened will kind of get cancelled, and the projects will come back live. The bench strength will start coming down. So overall, we believe that the environment is improving for the IT companies. Of course, the election season in US remains a bit of a challenge. So maybe one more month, little bit of confusion, but post that, I think things should look really bright for IT companies.
Take on IT, but Sudip, curious to know what's the take on the Hyundai IPO? Was a very slow starter, but finally it's got fully subscribed. Still some hours to go. Is it an avoid or a subscribe?
It is, if you're a long-term investor, you can surely subscribe. If you're expecting a major, pop on listing, I think that is not going to happen. And that's the reason probably we did see subdued subscription numbers. It's a large IPO. Basically it's a large OFS rather. When these kind of large IPOs come, they suck out a lot of liquidity. And because of the challenges around the entire automobile sector at this stage, I think the response has been a little bit subdued as well. But undoubtedly, from a long-term perspective, I'm positive on Hyundai. It is the second largest automobile company in the country and consistently has been so for many, many years, with about 17-18% market share and growing significant presence in the exports. So the potential is definitely there. We have seen what Maruti has delivered over the years to investors, and I'm reasonably sure Hyundai also will deliver good return to long-term investors. But major pop on listing, I think that's not going to happen.
Not happen, but the subscription figure has now become almost 2.3x. So sailed through quite comfortably by the end of it, despite all of those worries that were coming in yesterday. But time now to take some BTST trades from our technical experts. Kunal, what's your BTST trade?
So I'll go with two buy calls. The first one is one L&T. Now apparently this stock, after falling sharply in the first few days of the month of October, I think is managing to show signs of recovery. It's now on the verge of breaking above its 200 moving average. So would suggest a buy with a potential target of 3,700. Stop loss could be kept at 3,500. And NCC is the other stock which has shown good recovery in the last 3-4 days from sub 300 levels to now 310 plus mark. So would suggest a buy with a target of 324. Stop loss at 303.
Right, Naresh, what about your, or rather, Rudra, what about your BTST trades?
See, for me, IT is outperforming and I'm picking Tech Mahindra. Tech Mahindra looks very strong and it has given a small breakout now above levels of around 1,685. So I will be a buyer here with a target of 1,735 with a stop loss of 1,675. And also for me, Hind Petro looks a very good outperforming stock. So Hind Petro can be bought for a BTST target of around 440 and one can have a stop loss of around 428 for the same. So buy on Tech Mahindra and Hind Petro.
Okay, buy on Tech Mahindra and Hind Petro. The numbers for Jindal Stainless are also out. Just let's take a quick look if the stock is reacting. We'll try and get more details into how the performance has been, because I'm just looking at the initial numbers that have come by, and on a consolidated basis, those numbers will come up for you on the screen as well. Overall, it is expected it is going to be a decent set. Yeah, the revenue has come in at 9,776 crores, which compares with 9,797 crore last year. So pretty much flat on a year-on-year basis. And the profitability for the period has dropped a bit actually. So this time the profit is 610 crore versus 764 crore rupees that they reported last year. So the top line has remained the same, but the profitability is much lower on the year-on-year basis. And that clearly tells you that the story of pressure on margins is the biggest story that we're talking out of this earnings season. And that is what is playing out. That stock has taken a bit of a dip right now. It's down almost 1.3%, but we'll wait by and get more details. These are just the initial numbers that are hitting the screen for now. So overall, that's how earnings season is panning out to be. In terms of the other internals right now, on the losing side, CRISIL is giving up gain. Overnight, it was quite excited by the earnings that it posted. First Source is under pressure. You also have other names on the gaining side. So IOB is reacting positively to its earnings. There's a bit of a perk up on Nykaa as well, and BKG Foods is also doing okay in the trading session. Sudip, what's your take on real estate as a pack? Because very varied kind of anecdotes coming in. On one hand, there are those mega ultra luxurious properties which are getting sold out in Delhi at 75 crore a piece, and while on the other hand there is that clamor of inventory being on the higher side, a bit of a moderation in prices, if you may. What's your sense on real estate?
Well, the ultra luxury segment is a completely different beast altogether. So if you leave that aside for a minute, I think there will be a pickup in middle income and low income housing in the near future. We expect interest rates also to start coming down in India, and when that starts happening, I think interest rates coming down does help lower income and middle income households to look for buying properties. And there will be a momentum back. So the developers having inventory and having business in these segments will start benefiting disproportionately in the near future. That's what we believe. So one should look at those kind of developers. Amongst the developers, listed developers who are around, we do like Godrej Properties even at current level. Even Macrotech at current level does look good. But these are all for long term, not for the immediate trading purposes.
In the interim, would you also look at some of the allied spaces when it comes to real estate as a sector, Sudip?
Absolutely. We have been looking at the allied spaces for quite some time, and there are interesting opportunities there as well. Somani Ceramics is one company which we like at current levels. We also like some of the cement companies, A, because of the demand pickup which is expected, and B, because of the corporate the acquisitions and corporate action which has been happening. So a Ramco Cement, Sagar Cement, and companies who are potential targets for acquisition, including Heidelberg Cements, can be looked at for the corporate transactions in the near future.
Right, okay. That's the take coming in on where within the entire realty universe one is seeing some value opportunities. But Sudip, good to have you on the show. Rudra, Kunal, we'll let you guys go as well on that note.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.